We're talking to Cigna CEO David Cordani, who's just wrapped up his Investor Day today. Thanks so much for taking the time to
Great to be with you.
So one of the things that I thought was interesting is you were talking about what the outlook was in terms of employers and a potential recession. We've heard CEOs like Jamie Dimon who said, brace yourself for some kind of hurricane. We just heard Elon Musk saying he didn't feel very good about the economy here in the second half of the year. What's your perspective?
So I think it needs to be viewed against the current backdrop. Most employers that I interact with throughout the United States, small, medium, and large, actually in the current environment are struggling to attain full employment. So it's a little different if we do embark upon a recession. We're going to be entering a recession off of an environment where employers are still looking to get to a level of full employment. And I think that provides a little bit of flexibility where employers may slow down the rate of hiring, maybe stop the rate of hiring, and maybe have a little bit of dislocation. But for the employers we serve right now, there's still an aggressive growth to drive their employment levels. Secondly, if there is a recession or dislocation, oftentimes the services that we bring forward are even more in demand. Helping employers keep their employees healthy, keeping them engaged, keeping them productive becomes even more valuable in an environment of economic dislocation. So we see high demand in the current environment and have yet to see a dislocation from an employment standpoint.
Yeah, it's interesting because I remember with the 2008 recession, we saw a lot of people fall off the rolls, millions. But with the COVID pullback, we didn't see that really.
Correct. So I think we're instructed by two very different experiences, and absolutely. The 08-09 recession, you saw a lot of people come out of the employment landscape and you could see the impact of that. With COVID, we didn't see that for a variety of reasons. One, employers in a really positive way stepped forward and supported their employees. They supported their employees in terms of keeping employees either employed or if they did furlough individuals, kept their benefits from a continuity standpoint. And then secondly, we come out of that environment right now, as I indicated, with a level again of growth of employment for corporations of a variety of sizes, whether you're in the service sector, the CPG sector, the manufacturing sector, et cetera, we're seeing employment growth. So if employment growth does slow down, I think it's going to essentially take some of that demand out of the system before it goes through broad dislocation of employment.
So if we're using the Jamie Dimon hurricane metaphor, you don't think this would be like a Category 3 storm? This might be more of a tropical storm?
I'm not a weather forecaster. I think stepping back, whether you look at it through Jamie's eyes or what Elon recently said, folks are feeling uncomfortable right now, right? There's economic dislocation transpiring. We're dealing with levels of inflation our society hasn't dealt with in quite some time. Interest rates are beginning to move rapidly. There's still supply chain dislocations that are transpiring. So it is clear that while the consumer behavior relative to spending has remained robust, there are some economic dislocations. So back to, through our business modeling, we're expecting some level of disruption. But for our business, we have a very broad services business that is positioned to help employers, health plans, governmental agencies, and importantly, healthcare providers in terms of what they need. That's a $100 billion plus business for our corporation. And then we have a benefits business in the United States that serves employers, but also serves global employers from that standpoint. So having the services to be able to flex is very important. We believe there'll be some economic dislocation for sure. The rate and pace and depth is uncertain at this point in time.
You know, you talk about these new services that you've added, with MD Live and your emphasis on being able to provide services virtually, being a way for both patients and their employers who pay the bills to save money. I wonder, how do you envision that is growing so much faster than the actual plans themselves?
Sure. So when you think about care delivery, so care delivery in the United States in many ways is the most sophisticated care delivery infrastructure in the world, especially when it becomes for specialty care. However, we have an absence of availability of certain services in many geographies, or in the case of behavioral health, there's just an absence of behavioral health resources from that standpoint. You juxtaposition against that the rapid change in technology and data availability, and we have virtual care. And then COVID stimulated a rapid acceleration of it, and consumers were quite pleased from that standpoint in terms of the care experience, and it was more affordable. And you're able to bring more services to individuals on a real-time basis. And in the case of behavioral care, you could bring services immediately to somebody in need, as opposed to waiting a week or two from getting a service. So within Evernorth Care, we have essentially a $10 billion business today, and relative to our virtual services, first quarter of this year versus last year, it's up 29%. So we see rapid growth to extend the care delivery system and bring highly personalized services for the benefit of individuals.
And on the plan side, this is a time of year when a lot of employers look to negotiate their plans for the following year. What does it look like in terms of the rate environment between potential headwinds from COVID, and on the other side, we have a blockbuster drug that is now going to go to biosimilars? Will the Humira biosimilars produce savings and be reflected in rates, whether we're talking about employers or Medicare?
Yeah, sure. So a few points here. One, in the commercial employer marketplace, we're seeing tremendous growth in 2022. We recently increased our outlook for a net growth of customers of 725, at least 725 net new ads in our commercial population. So our value proposition or our services are being received quite well, and we provided to investors today our early outlook relative to 2023 will be another year of growth. For our Evernorth services, similarly, we're seeing great retention and growth of new business. In between, that affordability curve that you make reference to, mission critical and front and center for every buyer. And as it relates to pharmaceuticals, we are a leader from a pharmaceutical standpoint, and from a specialty pharmaceutical, we see tremendous savings. Specific to Humira and the variety of biosimilars that will transpire, over the next 3 years alone, we'll go from about only 7% of specialty medications having a biosimilar alternative to fully 25% having a biosimilar alternative. That's a phenomenal societal savings, up to $100 billion of societal savings that are available that will largely go back to employers who finance, as well as to individual beneficiaries. And through our business, both Accredo and CuraScripts, we are in a leadership position to be able to bring those services to our employer clients and our health plan clients.
Will the patients end up seeing that savings as well in terms of their co-pays?
Unequivocally, they'll see it one of two ways. They'll either see it directly, depending on their benefit designed by their employer or governmental agency, in a lower co-pay or co-insurance level, or lower premiums. Because specialty pharmaceuticals today are the fastest growing cost category of all medical services. So taking that cost category and bending it down either abates the premium growth or abates the out-of-pocket, and in most designs will mitigate both.
And I have to ask you, one of the potentially most disruptive rulings that is anticipated this summer is from the Supreme Court with regard to abortion services. You talk to a lot of employers. A lot of them are trying to figure out how to handle this if and when it happens. What kind of things are you counseling them? What sort of things can you help them to navigate, particularly employers who want to maintain those benefits for their workers?
Yeah, sure. So to put that in context, the vast majority of employers we service in America are what is referred through self-funded relationships. So we work with them in a very consultative way. And this important topic that you're making reference to will be a decision employer by employer based upon their benefit strategy, their philosophy, and then the states that they operate in. To the extent there's disruption from that standpoint, we position ourselves to afford the choices that they need. The choices that they need state-specific, nationally, transitional services, transportation services, et cetera. So as important as this topic is, which is incredibly important, it will be one employer at a time. And it'll be decisions that are made by employer that we will support, and we will support with choice, broader access as they see fit, and resources that are available relative to it. And the breadth of our portfolio, both in Cigna Healthcare and Evernorth, is positioned to be able to do that.
How disruptive do you think this could be?
I don't know what the final conclusion is going to be, right? So change is disruptive. And on this topic, it has the potential for being significantly disruptive. Our opportunity is to bring it back to one employer and one decision at a time, because there will be no national solution for this. All healthcare is local and deeply personal. And our philosophy is to be able to enable that. And we work with employers literally one at a time. As large as we are, as a $175+ billion corporation, it's one employer at a time based on the solutions that best work for them, as opposed to trying to infer a single solution that works. Because in this case, it won't be a single solution.
It won't. And for large employers, it's also going to be an issue where many of them will have to take a stand and defend that stand, which is new for a lot of companies.
And again, we don't know what the final conclusion is, and we don't know, depending on the final conclusion, how it will manifest from federal posture versus state-specific posture. What it will do, though, if we follow the line of your great questioning, is it's going to provide a lot of choices and a lot of change and transition, and having the services on our behalf to be able to bring forward for the benefit of employers, that's mission critical. Again, one employer at a time to make those decisions.
David Cordani, thank you so much.
It's good to be with you today. Thank you.